Good afternoon, ladies and gentlemen, and welcome to Gresham College. For those of you who don't know me, I'm Michael Mainelli. I am the Emeritus Professor of Commerce here and one of the trustees. And it really is a delight for me to open today's symposium, which has been a long time in the making. A couple of years ago, we started discussing the fact that we really ought to have some sort of event on offshore, onshore, midshore, havens, international financial centers, many things you'll learn about this afternoon, which is obviously the purpose of a symposium. I'd like to single out, if I could, one audience member. Chun, would you mind raising your hand? For it was Chun who handed me a copy of Nicolas Sarkozy's book, Treasure Islands, and said I should read it. And I read it, and while I may not have agreed with everything, I did believe it deserved a hearing. So that was one instance for this one. And I'm joined actually by two friends who I like a lot. Richard Hay, who will be presenting kind of the anti-Shaxson case, and Mark Field, our local MP, who has stood up and said we have to think very hard in Britain about what we're doing about these centres. And finally, for a wonderful sense of international perspective, Jakob Schad has come over today from Switzerland to present, I think, one of the most interesting mid-cases of what is offshore or onshore or European or London or what have you. So it should be, I think, a very, very fun and interesting event today. This is obviously part of our long finance program. In fact, it seems like a long finance week. We had our long finance conference with 300 people yesterday at Bank of America Merrill Lynch. We had an event on Tuesday night on ethical banking frameworks. We have an event tomorrow on confidence accounting, and obviously we have today's event on offshore. So it's been a heck of a week for long finance, and I am never ever going to schedule so many events in 1 week again. Which means my remarks this afternoon may be slightly less erudite than I like to pretend they normally are. Anyway, just to kind of get going on the topic, I'm here to sort of just set a little bit of a scene and provide some personal remarks. And oddly, whereas I normally stand up here and talk with great authority about everything I know nothing about, in this particular case, my firm, ZN, runs the Global Financial Centers Index. So we have an interesting perspective on the 85 or so cities that claim that they are really a financial center. And I think it'll be coming up today, and I just wanted to give you a little bit of background on that. For those of you who find the slides difficult to read or want to delve, on your seats there was actually a copy of the Global Financial Centers Index 15. There's also, courtesy of the IFC Forum, they've kindly donated one of their publications, which is also on your seats. So there's stuff to read as well when you find that you want to wander from my discussion. Where I'd like to start is with Monty Python. There's a great Crimson Permanent Assurance short where a bunch of merchant bankers set sail from a merchant bank off Lombard Street as they pull the anchor up, and they wander the world as pirates, fighting and destroying other financial centers. And there's a lovely, absolutely lovely poem in it. And I'm not going to a song really, but I won't try and sing it. Call it a poem. It's fun to charter an accountant and sail the wide accountancy to find, explore the funds offshore and skirt the shoals of bankruptcy. And it does sound horrifically romantic. A bunch of pirates, taking to the seas and doing what they like around the world and wreaking economic havoc. But we are living through some very serious crises. We founded Long Finance to answer the question, when would we know our financial system is working? And we're not a lot closer. I've certainly got a lot of ideas, but we're a long way from claiming that the system is working. And political leaders are out there constantly trying to find scapegoats. It certainly couldn't be the political leaders or the regulators, God forbid. It's greedy bankers, it's dopey rating agencies, useless accountants, hysterical journalists, and there are victims, us. So somebody with suspect motives must have caused this harm. We just need to name them. During the Great Depression, another period when scapegoats were sought, H.L. Mencken wrote of morons blaming the machinations of werewolves assembled in Wall Street. And with any financial crisis, it actually turns out it's not that simple. It has multiple causes. The problem is that the populace needs the distraction of some very simple guilty verdicts. In fact, I would argue that financial crises since 2007 suggest that large states have a comparative disadvantage in global finance. they seem unable to combine wholesale and retail financial regulation without incurring booms and busts. And they are not paragons of virtue at all, leave alone LIBOR, FX, and numerous other scandals. The largest amounts of recorded money laundering took place through London, Zurich, and New York. So there's no shortage of large nations' banking sleaze. There was a very interesting report done a couple of years ago by an Australian academic, Sharman, where he actually rings around various centres, and I think he was faxing a dodgy Australian driving license and trying to open up accounts. And he found it very difficult to open up accounts in the Caribbean, in the Channel Islands, in Switzerland, but he had no difficulty in America and London. It was an absolute doddle. So let's be not so hypocritical. The comparative disadvantage of large states indicates that there may be, interestingly, I would argue, a way to aid global financial reform through offshore centers, and I just want to lay that on the table. I believe in its simplest expression, large economies will never be able to regulate wholesale and retail properly. If you accept that, then why don't you push some of this problematic wholesale financial activity towards designated offshore areas? And in fact, that's what I call midshore. So just an interesting thought that we might be, instead of hammering at the offshore centers, trying to use them as a tool to make the larger centers work. Now, from January to June 2013, the UK media had headlines such as Google, Amazon, Starbucks, the rise of tax shaming, and David Cameron, tax-avoiding foreign firms like Starbucks and Amazon lack moral scruples. I found that very interesting. In late June 2013, Starbucks agreed to pay $20 million to the UK Treasury, $10 million last year. And given that Starbucks reportedly paid no tax in the previous 4 years, $8.6 million in corporation tax in the UK over the previous 14 years, yet had sales in the UK of $400 million per annum, this might sound like a victory over tax evasion. However, at no point has any authority accused Starbucks of not complying with tax law. Having followed the tax code correctly, Starbucks reached annual agreements with HM Revenue and Customs that little or no corporation tax was payable. The majority of people, however, seem to have no problem with Starbucks payment, or feel an urgent need, on the other hand, to reform the tax laws that led to this situation. But as an accountant, I wonder how these payments should be booked. Certainly not to marketing or advertising, possibly to tax. Tax liabilities have always been a complicated area, but in this case is the payment a mistake, an adjustment to historic tax liabilities, i.e. Starbucks should be suing Deloitte, their auditors, for miscalculations. Or is it a retroactive tax? Is it a bonus payment or a donation to HM Revenue and Customs for all the help in not paying tax in previous years? Is it a donation paid or a bribe paid to the UK coalition government, or perhaps to David Cameron, who clearly wanted this? Or is it a shakedown or a protection racket payment to a corrupt government? Perhaps I might mischievously suggest that Starbucks be reported to the US authorities under the Foreign Corrupt Practices Act of 1977, which was enacted for the purpose of making it unlawful for certain classes of persons and entities to make payments to foreign government officials to assist in obtaining or retaining business. And it's pretty clear that they made that payment to retain business. The rules on international corporate taxation are close to unworkable. In fact, it's amazing that we talk about dual taxation agreements in what is clearly a multinational world, and these are multinational organizations. In fact, I have, and you may remember my lecture many years ago, corporation tax or income tax, which is the greatest con, where I pointed out that actually ultimately corporation tax is a mechanism that allows governments to hide the amount of taxation on the population. So I wonder why we don't question the theoretical basis for taxing corporations. Things, however, are no better with international personal tax, whether it is the inheritance tax nightmares we see in probate courts as lawyers drain away estates, or the future delightful catch-22s we're guaranteed with the U.S. Foreign Account Tax Compliance Act, which ranges from the illegality of overseas compliance to denial of service for U.S. citizens or residents. And in fact, in the same IFC magazine on your desk, albeit small, they report the doubling of the numbers of Americans who've given up their citizenship in the last year. There are a lot of bodies shouting for reform, and some of their intentions can be questioned on both sides, I think, both the corporate and the tax fairness arguments, but it is clear, I think, that tax reform is essential, and I'd almost say that's probably the place we ought to be starting, is how to reform it, admitting it's already in trouble. But this is unlikely to be smooth or straight. Within Britain, we've absolutely failed to have tax reform. It's been a long-running debate in the United States. The tax codes grow and grow, and in this area, it's multinational in the first place, so it's very difficult to see how reform would come forward. And it's no surprise that governments are pursuing aggressive tax enforcement, given that their monetary systems are under strain following a period of excessive credit growth and banking leverage. They need much tighter budgets and recapitalization, and so they're grabbing it wherever they can. And naturally, during these types of financial crises, weightless capital flies to safe havens. They want to be beyond the dangers of grasping governments. I would add to this that this period has coincided with a period of global unrest, which has equally been enormous. Just mentioning the Arab Spring, Thailand, Turkey, Ukraine, Crimea, Russia, this encompasses huge numbers of people and territory and enduring civil unrest. The news yesterday was that the Russian government expects 70 billion to flee Russia on the basis of what it itself has done. And these conditions form a perfect storm for wealth destruction. London, home to a few financial crises of its own, has paradoxically benefited from capital flight. I think, and you'll see in the foreword I wrote for the Global Financial Centers Index, London itself needs to shape up. In comparison with many other places, though, it is a safe haven. London may have moved, however, I think sometimes from being a center of wealth creation to a center for wealth protection, and this may potentially, I think, harm our domestic economy's future. Well, since 2008, offshore centers have actually held their own in the Global Financial Centers Index. It's been a period of increased volatility without question, as we found. And I often wonder if when people talk about a racket, they ought to look, I think, at the definition. It's a service that is fraudulently offered to solve a problem that would not otherwise exist. So are these offshore havens actually safe havens, or are they themselves a racket? Or is it the opposite way around, that we ourselves are creating the racket? Now, as you look at a variety of other areas, for example, the EU over Cyprus, where accounts were basically shaved, the USA on FATCA, the OECD's rules on tax equalization, the UK applying retroactive taxes. If you look at it from abroad, you get a retroactive tax under Gordon Brown, the Starbucks shaming I spoke about. It's very easy to see that the value of wealth protection is growing. It's becoming harder and harder to hold on to your money, or to feel that your money will be treated properly. And these offshore centers, I think, sometimes compete by providing that type of stability, and also by simplifying financial services where it gets too complicated. So perhaps what we have here is a failure to take positive action and show how we can simplify our own systems. Well, in the top 20 Global Financial Centers Index, I would draw your attention to a few things. The first thing, the big local news, has been that New York has overtaken London for the first time. Actually, in the 6th edition, they were only a half a point apart, and at this point, London is now 2 points behind New York. I have always emphasized that this is statistically insignificant. Anything of less than about 20 points is not worth talking about, but I don't write articles for the press, and as far as they're concerned, New York has overtaken London. That is the news. Don't be surprised to see the news next time flip the other way, but in terms of the way the index works, they're up there. But this is to miss the big story. And the big story is that over 15 editions, Hong Kong and Singapore have consistently just taken chunks out of the leaders. The other thing I'd ask you to look at on this list is not the numbers, but it's actually the positions. I'm absolutely delighted Jakob is here, because you can see that Zurich and Geneva, in a country of 8 or 9 million, we have two major financial centers right up there in the list. That's pretty impressive when you begin to ponder it. And then I'd ask you to look a little bit longer on that list, and you'll see Luxembourg. And we could have an argument as to whether or not Luxembourg is onshore or offshore. And I particularly welcome Jakob's views on where he would place this and how he would categorize some of these things as we move into discussion. But you'll see nowhere on that list any of the traditional shadowy centers that are supposed to exist in the Caribbean or off the coast of Africa or off the British Isles. This is a graph that shows you sort of how things have been trending, and I think the really big stories in the future are really just going to continue to come out of the East unless we actually shape our act up. And I'm afraid that's not the most positive view of life, but it is something that we can take advantage of. In the cover of the GFCI this time, for some reason the graphic designers, they always have to find something with numbers on it, and they decided this time to focus on House of Cards. For those of you who are aware, this is a big US drama that's quite popular, and Kevin Spacey is the lead. He was I'm trying not to forget the name, Francis anyway, the lead character. And the lead character says there's two kinds of pain, pain that you grow from and pain that you just endure. And so I think the question for London is what's it doing about it? But today is about offshore centers. And actually the reason for showing you that previous slide is while you can see that they took a very severe hit during the period of the financial crisis, that's over here on the left, GFCI 2, so did everybody else. And you can also see that they're sort of climbing. This is a bit deceptive because Monaco's position as it's rolling up at the moment leaves you a little bit, I think, overemphasizes the so-called growth. Actually, what's been going on is while the index overall has been rising and volatility has been rising, most of the offshore centers have been slipping a little bit behind each edition. So they are struggling with it quite a bit. And the final thing I might show you that gives you just a little bit of data that you can read in the report, obviously, is what we call reputational disadvantage. One of the strengths of the methodology that we use is we're able to say what people should have said. I know that sounds a bit presumptuous, but we can statistically analyze what they would have said if they didn't know the name of the center. It's probably the simplest way of expressing it. And this is the disadvantage chart. My apologies for the 500 alignment on Cyprus, but you can see Cyprus, Budapest, Mauritius, Riyadh, Tallinn, Stockholm, St. Petersburg, Moscow, Reykjavik, and Gibraltar as ones where they should be doing much better than their fundamentals. And amongst that list in offshore, I would certainly include Cyprus, Gibraltar, and Mauritius. So an interesting poke here that the offshore centers seem to be getting a reputation worse than what their fundamentals might indicate. Now, I said that I thought that there might be a way that this could be a positive thing. I think an intelligent use of offshore centers might accelerate some of these reforms to the global financial system. And I think it's important. I think, Mark, you made a point in one of your debates in the House, but related to that, I think, is that there are 221 sovereign states and dependent territories in the world. 67 of them have a population of less than 1 million. And it's interesting that that list is your offshore center list: Bahamas, Guernsey, Isle of Man, British Virgin Isles, or Gibraltar. And why is that? Well, they've used their constitutional independence to develop legislation, regulation, and tax vehicles that attract non-resident business. And many of them have used, in my opinion, this comparative advantage to create some pretty world-class centers. I travel the world frequently analyzing this, and I can honestly say that some of these offshore centers have some of the brightest minds working on these problems. In some ways, they're much more joined up simply because they're smaller. I can go to an offshore center and often find people who really have a better picture of finance than people have in London, because they understand the interactions amongst insurance and asset management and banking and what regulatory regimes look like across the world. In some ways, being in a small island is a better perspective. Now, I would argue that offshore centers have 4 roles, 2 of them potentially good and 2 of them not so good. Good to me is what I spoke about earlier, long-term finance. And as people in long finance, we're interested in vehicles that facilitate a longer-term view. And if you're able to bring your money to a center that gives you some sort of stability, we would argue that must have some positive effects. The second positive one is arguably, I think, regulatory simplicity. Many of the people who rail outside about the use of offshore centers have never tried to do a multinational deal. That's all I can say. A 2-country deal, maybe a 3-country deal, you need an offshore center. I have used offshore centers. I do not feel guilty about it. It wasn't about avoiding tax. It was very much about trying to get the deal done in a legal way, under a legal mechanism that didn't mean I spent the entire deal paying lawyers to do it. Many of these deals are irreconcilable. I won't go into the details, but if you're a French pharmaceutical attempting to purchase an American pharmaceutical division, it is just absolutely impossible to do the deal without an offshore center. So international business would come crashing to a halt. Now that's not all tax evasion. There's personal tax evasion and many other things, but it is that regulatory simplicity. However, we have tax evasion, tax avoidance, tax mitigation. I've seen both of our opening speakers' remarks, and so I'll leave that to them. Many complicated and rich issues there, many good, many bad. And then finally, I think there's secrecy. Secrecy is easily attacked, and it's obvious we don't want it, but that's when you look at it from a stable country, and it can be quite a cutting question. When you look at it from an unstable country, secrecy can mean being less vulnerable to extortion or kidnap, or more able to consider positive reforms. So again, I don't want to make out that secrecy is a good, but it isn't necessarily a bad. And there have been a number of places where actually offshore centers, yes, have contributed to unstable regimes, but have often contributed to the creation of democratic regimes as well. So a bit of balance on both of those. I certainly wouldn't deny that secrecy does too easily correlate with criminality, particularly with money laundering. But I do think that there are solutions to that. You know, Bermuda, Barbados, and some of the other offshore centers do have information agreements that allow competent authorities to share some of this essential information responsibly without risking legitimate people. Anyway, there are many small states that don't meet those essential levels of transparency, but then so too are many larger states. On the offshore centers, I said midshore, I see them perhaps potentially in the future acting as way stations that facilitate complex international trade and investment flows, really just for that class of multinationals. You know, imagine a Japanese company that builds and sells products in Britain, the USA, and Turkey and Japan. If the holding company is based in an offshore financial center, corporation taxes on earnings will be paid in the British, US, Turkish, and Japanese subsidiaries before they arrive in the holding company. Taxes on dividends are then paid by the shareholders when they repatriate their dividends home. There are no taxes in the way station because the money is in transit, and taxes are paid at the beginning and end of the journey, just not along the way. And that seems to me like a fairly simple principle, that they're helping to do that. There are some problems with this. I think possibly the most important one is timing. To listen to the stridency of the tax brigade before anybody even thinks of a tax, you should be reaching into your wallet to pay it. And there are problems because a lot of these way stations do facilitate, you know, putting things off a year or two, but they don't necessarily facilitate the tax not being paid, just the timing of it. Now imagine that that same Japanese company is sold to Chinese shareholders and ceases trading in Japan. Where should the taxes be paid? Again, the company's operational subsidiaries should pay corporation tax in each jurisdiction, and the Chinese shareholders should pay Chinese income and dividends taxes. Without the offshore centers, taxes will be paid not just in the US, where some of the activities place, or in China, where the investors are, but also in Japan, where no activity or investors reside. So that doesn't seem fair either. Excessive taxation in this way actually reduces the returns from international operations and trade. And so this way station idea is actually helping trade. And before you think of trade as some vague thing, I mean, I've always argued that my economic hero of the 20th century is a chap who actually destroyed East London and devastated our northern ports. No, I'm not talking about Adolf Hitler. I'm talking about Malcolm McLean, inventor of the sea container. And it was that trade that changed the whole geography of the world. It also lifted about 2 billion people out of poverty. So anything that facilitates trade must be something that we have to take quite seriously, ethically, and there's a long way to go. Every study on trade has pointed out there's a long way to go to help us become more efficient. So excessive taxation or tax complexity are things that I certainly would like to look at in a semi-positive way. Now finally, I'd close on how is this going to look abroad? Well, in biology and economics, actually, there's a term called signaling. It's how animals and people convey information about their abilities and their intentions. I think offshore centers should be developing a much clearer message. And Stuart today can talk to us about Alderney's message and what it's trying to convey. I think that things like freedom from interference and their dependence on financial services, which with signals like that, or signals like getting a credit rating, following legal codes, the key message is that unlike financial centers with large domestic economies, offshore centers won't do something stupid. For example, radically change the tax code overnight because of an article in the Daily Mail, or impose onerous regulation at short notice. It's too much in their selfish interest to run a stable center. I don't think it's easy. These centers do walk a tightrope across a chasm of claims on one side that they are actually capable of rapid change. If you ever traveled a small island, it's pretty clear who's related to whom, and if they really wanted to get up to it, they could do it fairly rapidly. Yet they also want to claim that they can change legal codes rapidly if you need it, which in some ways is a bit scary to somebody who's looking at investing in the long term. I want to avoid hasty regulation. That's why I came here, or hasty legislation. So anyway, I think that a more integrated perspective of comparative advantage emerges from the argument that savvy offshore centers really need to be there for the long term. And that means working in the long term with the larger developed economies as much as plowing their own furrows or sailing their own ships. Long finance structures, which I would define as structures that can endure for a generation or two, will benefit from avoiding the capriciousness of larger nations' domestic agendas. We can change our tax rules or ownership rules at short notice. I find it absolutely terrifying that a man can go up there with a red box as he did last week, and I have no idea what he's going to say. That's scary. That's not the way to be running an economy. And I think that well-regarded offshore centers could achieve a reputation for avoiding that concept of hastily enacted changes simply because they would harm their own self-interest. So today's question, offshore, onshore, midshore, are these saving havens? Is there something that can be done? I think it's much deeper than just the rhetoric of good or bad. And in many ways, like any critical evaluation of others, you find out that the mirror is really turned on you. So the program for today is on your seats. I want to point out I'm not going to read biographies. That's why the speakers very carefully compiled them. You'll get your own views on how they are. Please make sure your mobiles are turned off. For those of you who are on the CISI, Christine Whitaker did come, and I think she has got all of you, but do see Christine or Dawn after the break if you want to make sure that you got your CPD points. Our first speaker is going to be Nicolas in honor of the book and Shun's work. And then Richard is going to provide not exactly a reply, but clearly a very different point of view. And then I'll ask both Nicolas and Richard to come up here and comment on each other's, and we'll probably have about 15 minutes for comments or questions from you. Then there'll be a well-deserved break at 4 o'clock. Do be back promptly in about 15 minutes afterwards, and we'll then have the panel as a whole reacting to Nicolas, Richard, and you after some opening statements. You'll notice that we can't have a symposium without a drink, because that is the definition of a symposium, an intellectual discussion of some conviviality aided by alcohol. And my firm, Zien, has kindly agreed to sponsor that outside. It does look like quite a nice day, I hope, so we should have a bit of discussion, and I believe all the speakers are hanging around, so you can grab them and chat to them. I'd like to thank you very much for that and these opening remarks, and if I could, I'd turn over now to Nicolas Sarkozy. Nicolas.